The RBA lifts the cash rate to 2.35%. Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, the RBA, the Reserve Bank, has lifted the cash rate up to 2.35%. Now, remember, it used to be 0.1%, which was insanely low. 2.35 is still pretty bloody low. But our Reserve Bank governor, at least how the media was reporting him, said that the rates wouldn't increase until 2024. Now, I admit, I'm getting a bit old now. The beard is getting much wider. But we're not in 2024 yet, are we, guys? It's still 2022. Sometimes I think it's 23 because it kind of feels like it. Or sometimes I'm still in 2020. 21's just gone. But yeah, we're not in 2024, are we? Now, many of us didn't trust the Reserve Bank at all, or the media when they're, when they're saying that. We're thinking, okay, now it's time to lock in a really low rate because it's just going to go one way. And well, that's what's happened. Now there's going to be article after article after article, sob stories about people not being able to cope with these interest rate increases, and they're always going to blame it on someone else. We're seeing them now. I was talking to one viewer. He thinks they've already got them pre-recorded, pre-written, already ready to go. I mean, does ABC particularly have like a bank of people they call upon to be sob story participants? Maybe. But anyway, let's jump over here and have a look at the statement from the Reserve Bank. Okay, and this is on their website, and we can see the increase. And I will bring my chart, the cash rate chart, which I've updated again. Remember, I went for so long not having to update this chart. But look at that increase. Look at that sharp increase there. And just keep that in mind because we're going to go through some of the other figures here. Now, what we have here, this is the cash rate target, and we'll have a look at the statement. I'll open that up on another one. It's the 50 basis points or 0.5% increase is completely in line with expectations and forecasts. No one should be surprised at this. But look at this. We've had 1 increase, 2, 3, 4, 5 increases in May, June, July, August, September. Now, I thought, okay, let's have a look. Let's see when the last time we had something so significant like this. This is a huge move. Maybe here in 2008. We'll see. If we scroll back in 2020, we had they shaved it by 0.15. And then 2020, we had those 2 decreases. Remember that in March. We go back to 2019, you had 3 decreases, all 0.25. So we went from 1.25 down to 0.75, sub 1%. We keep going down. So what do the board members do at these meetings? Let's just randomly pick. What do they say? I guess they have to have a meeting and they do minutes. Do they get paid when they're not adjusting the rate? Maybe we don't want to incentivize them to play with things. If we have a look here, then in 2016. So between August 2016 and June 2019, we had no rate change. It was sitting at 1.5%, which was pretty low. 2016, then we had a decrease in 15, 2 decreases in 15, then nothing till 2013, we had 2 decreases. 2012, you had 0.5, then a 0.25, a 0.25, and a 0.25. So you shaved 1.5% off the cash rate in 2012. You went from 4.25 to 3%. If we go back to in 2011, we had 2. But then we have to go back to 2010. 12 years, November 2010, when we had an increase of 0.25. There you go. 12 years, everyone. That's just getting nuts. So, and then we had, what was it? The max in 2009, the max, back to back was 1, 2, 3 increases, then a break, and then 3 more increases. So, we're already having more back-to-back increases than 2009, everyone. So just keep that in mind. That went from 3% up to 4.5%. If we keep going down, that was after, in 2008, all of these decreases. So they took it from 7% down to 3.21%. We all know what happened there. And then they lifted it right back up. So we're going through this period here now where rates are going to start climbing back up again. So with that in mind, and if we go all the way back, like down here, you can see in the 90s, just rates are going down. No wonder people think rates only ever go down, guys. You got, look at that, a 1% increase. A 1% increase in 94, wow. 1% increase in, again, 2% increases in 94. So it's going to be interesting. Let's see the statement that they released today. So at its meeting today, the board decided to increase the cash rate target by 50 basis points to 2.35%. It also increased the interest on exchange settlement balances by 50 basis points to 2.25. The board is committed to returning inflation to 2-3% range over time. Now, how much impact are they going to have on supply side inflation, particularly from external overseas sources? How much impact they've got to try and maintain the value of the Australian dollar as much as they can. But are we just is our Reserve Bank just in the driver's seat or the passenger seat while the Fed's driving? So it is seeking to do this while keeping the economy on an even keel. The path to achieving this balance is a narrow one and clouded in uncertainty, not least because of global developments. The outlook for global economic growth has deteriorated due to pressures on real incomes from high inflation, tightening of monetary policy in most countries, Russia's invasion of Ukraine, and the COVID containment measures and other policy challenges in China. Inflation in Australia is the highest it has been since the early 1990s and is expected to increase further over the months ahead. Global factors explain much of this increase in inflation, but domestic factors are also playing a role. There are widespread upward pressures on prices from strong demand, a tight labour market, and capacity constraints in some sectors of the economy. Inflation is expected to peak later this year and then decline back towards 2 to 3% range. Okay. So is this a prediction from the Reserve Bank? Let's have a look at this chart here. This is my favorite one because it just shows you, well, this chart explains why I didn't believe the media when they were reported what the Reserve Governor said. I didn't believe the Reserve Governor when he said we're not going to increase interest rates because they're precedent. Look at that. Look how many times they were wrong with their forecasts of the wage price index. So why do we trust them? Maybe we need to fire a lot of them and start with a brand new one. Let's get an Austrian school in there and then shut down the Reserve Bank for a few decades. Let's see what happens then. Why not? Couldn't hurt any worse than that we're seeing now, could it? The expected moderation in inflation reflects the ongoing resolution of global supply side problems. And we're seeing that. Shipping costs are starting to go down to get a container from the US to China is a lot cheaper than it was. But still, it's insanely high compared to the long-term average. Recent declines in some commodity prices and the impact of rising interest rates. Okay. Medium-term inflation expectations remain well anchored, and it is important that this remains the case. The bank's central forecast for CPI inflation is around 7.75% over 2022. That's the center one. So it could be worse, it could be better. A little above 4% over the 2023 and 3% over 2024. The Australian economy is continuing to grow solidly, and national income is being boosted by record levels in terms of trade. The labour market is very tight, and many firms are having difficulty hiring workers. The unemployment rate declined further in July to 3.4%, the lowest rate in almost 50 years. Job vacancies and job ads are both at very high levels, suggesting a further decline in the unemployment rate over the months ahead. Beyond that, some increases in the unemployment rate is expected as economic growth slows. And I wonder if the participation rate will go up. That's where what can happen is when times are good, people will suddenly jump back into the economy. They'll say, they will participate again. When times are tough, unemployment may actually go down because less people will participate. They may step away. They'll give up looking for a job. They'll think it's hopeless. Wages growth has picked up from low levels of recent years, and there are some pockets where labour costs are increasing briskly. Given the tight labour market and the upstream price pressure, the board will continue to pay close attention to both the evolution of labour costs and the price-setting behavior of firms in the period ahead. An important source of uncertainty continues to be the behavior of household spending. Higher inflation and higher interest rates are putting pressure on household budgets, with the full effect of higher interest rates yet to be felt in mortgage payments. And you've got to remember, there's a lot of us that locked in at a lower rate. So there are a lot of people that aren't feeling these increases yet. So what you need to do, everyone, just don't spend. Pretend you're feeling the impacts of it. So, the Reserve Bank calms down. Consumer confidence has also fallen and house prices are declining in most markets after the earlier large increases. Working in the other direction, people are finding jobs, gaining more hours of work, and receiving higher wages. Many households have also built up large financial buffers, and the savings rate remains higher than it was before the pandemic. The board will be paying close attention to how these various factors balance out as it assesses the appropriate setting of monetary policy. The further increase in interest rate today will help bring inflation back to target and create a more sustainable balance of demand and supply in the Australian economy. Price stability is a prerequisite for a strong economy and a sustained period of full employment. The board expects to increase interest rates further over the months ahead, but it is not on a preset path. The size and timing of future interest rate increases will be guided by the incoming data and the board's assessment of the outlook for inflation and the labour market. The board is committed to doing what is necessary to ensure that inflation in Australia returns to target over time. Let's have a talk about this, guys. One thing to remember is here in Australia, the Reserve Bank doesn't care at all about house prices. I know it feels like, they do, but they don't. So if they're in this battle with inflation, how much will they be willing to sacrifice to attempt to get it under control? And is it even their choice? So there we go, guys. Let's have a look and see how the media is reporting this. ABC. How much extra could mortgage repayments cost now the cash rate is 2.35? Well, yeah, the most dramatic changes are going to be people coming off a fixed rate and then being shocked when they hit, go from sub 2% to 5 or 4, 5, and 6%. Australian policies interest rates to rise as the cash rate hits a 7-year high. That's not as impressive as it sounds because it's been so bloody low for so long. It's artificial. ABC, RBA increases the cash rate for the 5th month in a row. RBA boss shares ominous warning. Aussies hit with another massive rate hike from the West Australian. Reserve Bank Board lifts the cash rate to 2.35%. RBA expected to raise cash rates by 50 points. Yep, in September. There we go, yeah, the whole thing. So we'll have to keep an eye on it and see when we get some of the fear articles. So, well, this isn't the end. We're going to see more rates increasing. Will we hit 3%, 4%, 5%? And will there be a flood of people forced to sell, or is it going to be a wake-up call and a dose of reality to a lot of people? What about all the landlords? Are they going to start slowly creeping up rent? We'll have to keep an eye on it, everyone. If you're in the situation where you've got a mortgage and rates are slowly starting to creep up, well, you've got to prepare for it. You've got time. Find more money, really. Cut costs and find more money. That's what you got to do. Get another job on the side, work on the weekends, and then find a way to reduce your costs as much as you can. Anyway, guys, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions. And check out my other channel, HeiseBim and HeiseSays International. Particularly a recent episode on HeiseSays International about people losing control of the thermostats in their houses. As always, if you want to support us, you can via YouTube or Patreon. Use our referral links, buy our pocket squares, or call us if you need an architect. Take care, guys. Have a great day. And I'll see you next time. But is anyone surprised? No one can be surprised that when they said rates wouldn't go up until 2024, of course they're going to. It's like the Jimmy Cramer thing, isn't it? You do the complete opposite.